All right. How are we doing? How'd you guys end up today? A little bit of fun that went on, wasn't it? And the party doesn't stop. Party doesn't stop. Everybody hear me all right? Cool. Cool. So, the concept of failure, right? Keeps us out of trouble, but it also really keeps us on the right side of both short-term and long-term movements. Doesn't it? And the trades of the day today really revolved around what sort of movement up or down we had, whether it was lethargic, whether it was continuing, and we expected higher time frame movement for liquidity, or what it was doing. We'll go into that in a second. Just let all the stragglers come through. So we came in this morning, and we came in pretty much here. And some of you guys in chat were already involved in this barbecue, and we'll go into that in a second when we dive down. But we see this failure, right? This failure here during London session, spikes, change in order flow, trades back down. You then see more failure coming in. And recall that we use the 15-minute chart for bias. So when you see 15-minute failure like this, even if you're waking up, you're rolling out of bed, whatever, and you see here, you see failure, essentially your target is this low strong or not? Because it failed up here. And the way to determine that is if you see failure occur on the retracement down, if it gets defended at the move origin or not. You see we swept here. We went on a rocket ship, traded back in to mitigate it right at open, and then up we went. And now what you're looking at is you've got this area here. Sorry, let me reverse that. You got this area here for a target, and we blast through it, telling you we're taking liquidity here, and it's very possible that we're actually going to take these here, which might have not been the expectation going into No News Tuesday before FOMC, but everybody was caught offside by this unload of about 200 points or so yesterday. So our expectation was mean reversion, failure here, trades back up into this area. But we had no cause to be taking continuation shorts on this leg up. It was just higher time frame delivery. Okay? And now what you're doing is you're looking to the left for potential areas of reversal and monitoring the price action that goes into it. Are we lethargically moving into it, leading to rejection? Or are we skyrocketing into it, leading to liquidity? Which it did. Took that high. And then traded all the way back down to the SNDR that broke. Right? So, okay, this is the 15-minute chart. How do we use this to actually form trading decisions? High probability ones at that. And quite honestly, we put on a bit of a clinic today. Hopefully you guys took advantage of that. What ended up happening in the morning, this failure, rocket ship up. You've got your area of interest here, cool. But we came into the morning with this failure here leading to a retracement, and this retracement, lethargic movement, right? So we're looking immediately, first off, do we have an area of interest here? And what we do is we mark up from where your movement occurred, right? You've got your origin here. That's a valid zone in itself, right? But you also have this here where failing above takes us in, and you've got, not only have you got your area of interest here that then swept below, but you've got your 5-minute lows here, which are forming pretty much equal lows, and you finally get your change in order flow. So now you're looking at, this is where the majority of this movement started. So where do we draw this from? For this movement, for a retracement. You've got that here. So we drop into it. We see major failure occur. Strong push out of it. You'll notice in here, this low's job is to mitigate the prior zone. We come down, we sweep and fail it, giving you a beautiful trigger here. Let's take this off. We sweep underneath this candle, trade down, trade through it, stops now below, and no real reason at all to get out actually until this high was taken. Just a rocket ship with the expectation of higher prices. Why higher prices? Higher prices because this high led to lethargic movement down, which led to higher time frame price action. Barely retraced, and another rocket ship. Right? Now, the fun part in this, before the real movement happened today, was that you're getting this high, trades back down, we see some failure, okay, inside of our area of interest. And if you're expecting higher time frame delivery of another 200, 300 points up, great. But I think the majority of people were expecting a range-bound price action today, at least in the morning. And you could also justify that by suggesting, well, this low is putting in some failure here. That's not really the best high. We're coming down. We're putting in some failure here. This is range-bound PA. After seeing range-bound in here, even though we have this. So we accumulate after a large London move. Cool. Expect that. But you've got your low area here at the bottom of your range. You got your high area here at the top of the range. And you're looking at failure to trade back into the midpoint. Failure, which trades back into the midpoint. Failure, which trades back into the midpoint. And it's not until you see that change in personality that occurred here This is a low probability event that we took this high and then came back down for this low. Usually you'll see these candles being somewhat both inside candles of this bar, rather than tipping its hand and then running for the other side, especially with a 20-point movement. But certainly a change in personality where you've got these full body bearish candles, full body bullish candles, and the market's really attempting to sell off here. It's tipping its hand that it's ready to expand. And hopefully everybody in the room was able to avoid shorting inside of here. Right? Regardless of the trigger, we're expanding here. Now, there was a few trades of the day. One of them came in here. Another one was a couple of shorts later on, which we talked about. This high, not exactly what we want to see, is it? This high puts in this low, which fails. Okay. Chops around a little bit. This is not what we're expecting in higher time frame PA. We're expecting, if this is going to retrace and then leave, it's a higher time frame move, going on a rocket ship. Instead, we get this. Puts in this low here. Fails here. Right? This was challenging because that did sweep, giving a nice opportunity. There's actually two opportunities in there. But our expectation is a body closure above this candle. Why? Because that's a change in personality from what's going on. You've got this candle here, no body closure above it, which means the bearish price action is selling up here. And that continues until we drop down to where? Your area of interest from this low. And then you get this. This alone doesn't mean you can buy here. You could, if you want to risk 22 points of drawdown. Right? But the safer trade is understanding that we've now broken and closed above here. So now we're looking to trade back down into this area of interest. Right? You've got this low, that high, this low. We break it. Right? So this is your area of interest. And you're looking to trade back down into here for that change in order flow movement. You get that. Your stop goes below here. It in fact sweeps here and closes there. There's your continuation trade if you're really conservative and you're buying a close of strength, expecting higher prices. And now we want to see what? We want to see higher time frame continuation. So this goes above our next area of interest, this. Body closure again, comes down, and what does it fail to do? Continuation, comes down, taps into where? What does it fail to do? Higher time frame delivery, stepping its way up. Now this is attempting to reverse its trend. It's not creating any structure, but it's attempting to reverse its trend. Now, you have no reason to shorten here. You're getting triggers that might have provided 5 or 10 points. Right? This one might have provided, what? That would have given you 10 or 15 points. Right? That bearish trigger. This one is well above the high. Okay. But those are lower probability scalps than trading with trend failure. And now what you're identifying up here is that this movement, 1, 2, 3, 4, 5, this is how many attempts to reverse the trend here. Digs into this imbalance, gives you a nice 20 or 30 point movement out of it. Lovely. Right? But our weather conditions, we're expecting a trade back down to where? This area. I'll start from this. Right? And you can refine it down to areas that you're going to get speed bumps for. You're going to get a speed bump here. You're going to have a speed bump here. This would be the one that I would really put emphasis on, as it was responsible for this movement above this high. And then the second one is the actual origin itself that broke this bearish retracement where significant buying came in. So you've got this. Well, let's get rid of that for right now. Actually, let's leave it. You got this here. Can't even draw these right now. So we'll delete this for a sec. Here's your origin area. So you're looking for reasons or failures to get short, changes in order flow, taps back in to go short. So if you're fighting it all in here, this lethargic movement up, you're expecting this to lead to rejection, to break this low, and then trade into your area of interests. Right? Lethargic movement. Where does it break? Finally. You can spot it pretty easy on the chart now, can't you? Sure, easy in hindsight. This high, this low. You could argue one of these ones. I'm going to take the predominant one. Breaks it, trades back in, gone. You guys saw me take that short today. And then, as if that wasn't enough, this violent movement down leads to sideways consolidation, a change in order flow. Right? You've got this bull bar, and you've got this one that's closing on its high there now, lowering the probability this is going to go on a rocket ship. We're getting failure to close underneath this candle here, and then this one couldn't close underneath here, leading to a retracement to where? This area here. So let's mark it up. Come on. Gee whiz. Who could have predicted this? And you get your second movement. And you'll notice your second movement comes after. You can look at it as 3 pushes. You can look at it as a change in order flow. Some of you guys see it as SPS. I don't know. There's probably a million ways of describing it. What you're looking for is bearish price action with bearish narrative, trading back down to the prior area. Bang. Or you're looking for strong price action, right? You don't have to be in here calling the bottom if you don't want. You'll notice there was another change in order flow after we broke above that high there. Trades back down. Strong movement. That strong movement trades back in, and what do we see? Failure. Leading to what? A push back up. Push back up to where? Shocker. Lethargic movement down, leading to failure. Inside of an area of interest. Rocket ship. Right? So in my opinion, the trades of the day would have came in at least some sort of a short in this for that movement down to the prior zone here. But certainly there was a multitude of trades in here. A multitude of trades in here. Or the continuation thereof after the higher time frame price action. We don't need to necessarily be in here. If you spot it and you're comfortable with what you're seeing, with your failures and your narrative, you can grab that. Beautiful. But there's many trades to be taken on a daily basis. So why are we obsessing over the one that got away or the one that missed? Right? How'd you guys end up today? Anybody have any questions or anything with all of this? For a Tuesday before FOMC, this was actually quite beautiful delivery. Quite beautiful delivery. Cool. Yeah. This was a gorgeous day. I will. I'll let you guys go for the evening then. As always, hit me up with any questions, comments, concerns, or any fun stuff. And we'll see you for some more FOMC fun tomorrow. You guys have a good night.